We all have those periods in our lives where we kind of had the good old days, whether it's you and your friend group in school or immediately after school in the same hometown, hanging out every weekend, doing fun things, not thinking much of it. But again, later in life, you look back and go, that was the good old days, right? I should have appreciated those moments more. Well, regarding crypto, I actually think we're at that period right now. We're at that cusp of that sort of good old day period finalizing. And what comes next is a bit of a gray box. And why I'm saying that is because right now, to some degree, as I will explain to you in this video, these crypto cycles are actually still predictable. But what happens over the next few months will dictate whether we just live and breathe crypto, unaware of what may come tomorrow. That's a very scary thought, by the way, or whether or not this cycle continues to play out as expected. So this will be remembered, and I truly believe this, guys, as the time in which crypto either made it or broke it, right? I'm going to explain everything about what I'm talking about here in this video. I really hope you lock in and listen. I'd love to hear your thoughts down below as well. But before you go ahead and leave any comments, make sure if you find yourself enjoying this video, but most importantly, learning something new, if I gave you any thought-provoking ideas, drop a like. It really helps support me. I really appreciate that. And make sure you are subscribed as well. As we know it, the crypto cycle has a 4-year period, a 4-year stint, right through bear to bull market. So the bull run here starts in blue zone, and then we have the green zone, which is euphoria, aka alt season, followed by a 12-month bear market, then a 12-month consolidation at the lows, and then we usually come back up again, and the cycle rinses and repeats. Now, I'm not calling this 4-year cycle over, but I still think, the cycle itself, the 4-year cycle, won't play out as we expect due to other charts I'm not going to go into in this video. So to pull it back into why I think that this is fundamentally not over but flawed is just because we are looking at it through simply price action. We are looking at it through also the lens of miners, the halving. The halving are these dotted lines you can see here. Okay, the sort of idea goes when Bitcoin halves or the rewards become half, it becomes, first of all, it can actually become harder for these miners to actually receive the blocks and create the blocks just because of extra demand, but also because it slashes their reward in half, supply and demand at that point, right? So essentially that kind of creates the bull run. Every 2 years past the halving here tends to be obviously the bull run. And so this has been the thought process now for, again, the last, let's just say 10 years or so. But things are different. And I think things are different actually because of all of the news we've had over the last few years. It is the adoption bull run. And so with adoption, as we've always known, there is a risk of derailing from the 4-year cycle. And at that point, where we are right now, it's kind of scary because we still have signals for the 4 years. But again, we're at the whim now of institutions, entire nations even, and just large angel investors. So here's the thing. I want to really get into how we should have always assessed the 4-year cycle here, essentially the 4-year cycle, not really, okay, through moving averages, through not looking at volatile price action, which can be either really, really positive on some days, 20, 30% gains, and on others, 20, 30% down with even a slightest bit of macro negative news. That, of course, plays your mind. But looking at through moving averages over many, many days or even an entire year. I want to get into that, but before I do need to mention as well, we've had a recent report here by a top-tier VC, venture capital firm called Paradigm, in collaborations with these guys. And what they found here, I think, was actually really, really interesting. 76% of all firms, okay, are currently involved with crypto. Okay, 76%. 86% of these guys are also currently involved with blockchain and DLT. 66% of TradFi firms are doing something with DeFi. BlackRock, Franklin Templeton, Visa, JP Morgan's subsidiary here. Okay, so things are different. We didn't have this before, right? Or not to the same effect, at least. Again, the United States with the Bitcoin reserve, again, just crazy stuff. So a lot of us are like, well, price action isn't matching up to the 2021 cycle. So in addition to the adoption, things are way out of the woodwork right now. But I would actually disagree. In terms of my outlook and how you guys should look at the cycles, in my opinion, non-financial advice, of course, is again, not through price action, but through moving averages. That's just one of the ways, okay? I've made many videos talking about the pool multiple score as well. That's looking at through the eyes of miners because it tells a very obvious story of where we are right now, and also through the eyes of the average Bitcoin investor, right? MVRV score, market value to realized value score. But needless to say, I think this is pretty cool. I made this chart here for you guys, and I've showed it in previous videos, just kind of showing you that the bull run officially starts when the 50-day, 100-day, and 200-day SMAs move above the 12-month SMA. The 12-month SMA here is in this red line, and you can see here, if I kind of zoom in back to the 2012 to 2014 cycle, once this kind of moved above, once they moved above the 1 year, it signaled the start. All right, I got an algorithm working all this through. So that was the start. We had our nice pump, we had a retracement, and that's why I have this sort of green cove over the top of it just to show you that. We always have a second cove that usually happens before the peak. This happened here quite violently as well. And overall, this lasted not long at all, actually. This whole bull cycle until these SMAs moved beneath the 1 year. Again, the official signal of the bear market was 791 days. So you see, if we just simply use moving averages here, we cut out the volatility. These bands don't go beneath the 1 year until officially in a bear market. Yes, we're not trying to time the top. Okay, the top was way over here. All right, the official bear market started about 300 days, a whole entire year almost, after that point. But again, it's all relative price action, right? It's like, okay, so maybe we went up from this point in time. What was this? We went up 17,000%. And we came down here 50%. Then we had lows, and then we had the start of the next bull run when these moving averages went above to again confirm bullish momentum. We had the same green cove play out here, the push and the retracement, a second cove here in black here, and then we had that massive push again. Like, I think people try to get these, the time the cycles wrong. We've always thought timing the lows to the highs was how you dictate when the cycles start and end. I just don't think so. Not in a nascent asset class like crypto where it's very volatile. And that's just my opinion, right? And so you can see here, this sort of bull run in 2017 or 2015 to 2018 technically was 980 days. So lengthening here. Okay, it was longer. Then we had the previous cycle here. This was again a wild card because we had the start signal here right on time for that green cove. We didn't have that black cove, and the reason why is, again, because of the pandemic brought us down. The pandemic moved the moving averages down, okay, for a brief period, signaling, again, the bull run restarting here, which, again, that was unprecedented back then, never happened before. And then we had the official bear market start because, again, it pulled us down so quickly. And then it came back up, restarting the bull run. We didn't have the end of the bull run again until the moving averages went underneath the 1 year. So all in all, I'm going to ignore this noise because this second black cove should have happened, because looking at it through price action, you can actually see this starting to form. And if you look at it through minor revenue and minor cycles, and also through the MVRV as well, you can very clearly see something was forming here, and we were pulled down again because of macro uncertainty because of the pandemic. Anyway, that cycle actually still was longer than the previous, going for about 1,036 days. And from the start to the actual top, you can see it was even lengthening as well, all right? About 100 days extra. So that made sense to me, okay? The cycles, of course, are supposed to lengthen, especially when you dip in there, the adoption, all right? The overall adoption, not just in this cycle, but over the course of time, making it easier to buy crypto and so on. Now, here we are in this cycle again, just like clockwork, guys. Again, just like clockwork. We have the start of the bull run when the moving averages went above here, not the lows. We're not trying to time the lows of the cycle. It's not as though price action respects the cycles to the same day. We got to use moving averages here. Start of the bull run, we had the first cove. We had the second cove as well, again, in a longer fashion here. And again, right now, we are still above the 1 year moving average. Okay, so at the current point we're at right now, let's just move this back to the current day. We're sitting at about 700 days. Okay, so remember, this pretty much was the start to the peak back in here in the 2015 to 2017 cycle. And it was definitely past, of course, the very first cycle, essentially, back in 2012 to 2013. So yes, cycles are lengthening, and I do think we'll go longer than this cycle here. So through the lens of moving averages, that's why I kind of have it at least here, right? It's the same as the previous cycle. So we'll at least, I think, see the cycle top out in October-ish, likely extend. So looking at through this, again, you cut out the noise. That's what we are trying to do, guys. And so if we try to break up the new anatomy of what the bull run may possibly be, you get to a chart looking like this. Again, this is just the same exact thing as what I showed you here, but just breaking it up into different segments as you would like the 4-year cycle based on history, right? So it's like the blue part, right? The bull run start. Same, again, sort of method here with the moving averages. And you can see here we have the bull run start, the bull run end. Again, we're not trying to time the tops here. We have the bear markets. Then we again have a longer cycle here, 517 days between the blue and the green zone. All right, it was, again, lengthening here. And then have that red zone, the bear market. Then we had the blue zone. Again, this was slightly the same as the previous cycle because, again, timeframes are very similar due to the unfortunate pandemic. And then we have where we are right now. Now, if we just look at the blue zone based on the previous cycle, we're actually into the green zone right now. But again, we know it's lengthening, right? So because of that, we're likely we could even still be in the blue zone for all I know. But we are definitely either in the blue zone still or barely in the green zone. Not to mention as well, if you have a look at this through the lens of price appreciation, from the start of the blue zone here, so the official start of the bull run, to the end of the bull run, you can see here on candle close, that first cycle went up 3,000%. Okay, so if you want to time the exact bottom to the exact top, you get a much larger number. But again, we're doing averages here, right? Then you literally half that. So start of the blue zone to the end of the green zone, to the end of the bull run, you get 1,500%. That's literally cut in half, okay? Which again, we have longer cycles, diminishing returns. Now, fast forward to the previous cycle, we didn't actually have that great return. We had about 200 to 300% from the start of the blue over here to the end of the green. But the reason why we didn't have the halving, right, turning 1,500 into 750 or 700%, is because, again, we had the artificial, large increase here. And then we also had those banking collapses in the United States, as well as FTX, Luna, BlockFi, Celsius, that all pulled us down prematurely. So I do think, had that not happened, we would have likely trended up, as many people have said for the longest time, by the way. I'm not breaking this. I'm not just pulling this out of my bum. Many people have, and myself in the past as well, concluded we were likely going to see at least up here towards $80,000. Now, you may look at me and go, okay, Con, just trying to fit your narrative, whatever. If you have a look at the cycles, the premature start and the premature end, would just make sense. It would just make sense. Okay, this wasn't supposed to happen. That would have put us right on track, I believe, around 700% or so from the closure of that cycle. Likely, we probably would have had over here the actual all-time high around $100,000, right? So the sort of black cove I've used at the top here. So again, this X down here would have likely been up at about $80,000, not $45,000. But that's my theory. So in this cycle, I do think that we're likely going to see, at least based on diminishing returns, a better half of what it was supposed to be. So we had, again, just to remind you guys, we had 3,000, then we had 1,500. We should have had about 700, but we did actually have about 300% gain. So I believe we'll see about half of 700. We'll see about 350% from start of blue to here, which is about $120,000, which actually seems quite low. But remember, that is the closure of the green zone. So we'll likely see a number up here around 2 to 250,000, if not more, for the all-time high of Bitcoin. So that's my kind of breakdown of the cycles through the lens of moving averages rather than looking at it through the 4-year cycle and also looking at it through price action. But here is another dimension I need you guys to also remember. I pulled this up a few times now, looking at the ascending channel we're in Bitcoin right now, and looking at it through also the lens of global liquidity and through the business cycle in the US. The business cycle, don't let that confuse you. The bottom line here, this is just simply looking at how much consumers are willing to spend or are spending in an economy. When this goes up, consumers have expendable income. When this goes down, consumers are contracting. They don't want to spend, likely because they don't have enough, food to put in the fridge. Okay, so you can see here, we had a channel break on touch 2 of the upper part of the channel here, which coincided with a breakout in global liquidity and also the midpoint here in this U-curve for, the business cycle in the US. Now, funnily enough, this exact pattern played out here in 2017, which is the cycle I think we are more akin to at, touch number 3 here. We broke out of the channel. Okay, at the same point, global liquidity went up and also that midpoint in that sort of cove here for the business cycle. Okay, it was really, really weird. This fourth touch up here we had back in 2017, which preceded this cove in global liquidity before finally breaking out up here past 0.5, also happened to have the exact same resemblance of touch point 3 here. We had this U-cove and had this breakout in global liquidity we're experiencing right now. So again, very eerily similar cycles. While they don't exactly repeat, they rhyme. And you should never look at previous price action as an indication of future performance, but when things rhyme, you should at least take some notice. And I think it's super important to know what we're looking at here in terms of the moving averages. Again, guys, what we're not trying to do here is time the exact tops when looking through the lens of cycles. Okay, yes, if you want to exit your positions, it's very important to know roughly when the top's coming. And that's when charts like the MBRV, Z-score, and all the other indicators I share with you are going to play a very important role. But again, we're trying to look at the cycles here to determine where we are within our cycle based on history. So to do that, again, I don't think it's over, but depending on what the outcome is in the next few months, I think by about August, the next 2, 3, 4 months here will really tell the story. Depending how we treat these moving averages, especially if price falls beneath the 1-year moving average here, and especially if these moving averages start to fall beneath the 1 year, that to me is a massive, massive warning sign. So is, again, falling beneath this channel. Okay, if price actually, which we're getting close to now, if price actually closes beneath this channel, especially closes, this is the weekly chart right now, especially if it closes on the monthly and fails to break above it, that is a really big warning sign right there that maybe the top has already been in. But again, this next few months here is where it really counts, and where, from this point, we'll be able to say to ourselves, well, we roughly know where we could end up, all right? We roughly know, while predictions are, of course, just massive guesses, that we could likely still see a huge blow-off top moment coming in the next few months, maybe the next 12 or so months, or whether none of this stuff makes any sense, and we are literally at the complete whim, at the complete guessing game of whatever higher powers and higher forces tend to move these cycles, which we know are mostly indicative of the macro structure of things. So this is all very, very important. Again, that's why I tell you guys that the next few months here in this crypto cycle hangs in the balance, because while most people are freaking out right now that, hey, this cycle isn't the same as the others, I beg to differ. I think it actually is. Yes, from bottom to top, maybe it's a bit different to the previous cycle, and obviously it's longer than all the rest of them. As we've known, they're always going to get longer. But if you look at it through moving averages, this is bearish and bullish momentum. It doesn't lie. It's lengthening, guys, and the returns are still diminishing. It would make sense that we do have a blow-off top again higher than $200,000 if this comes true. All of this very much reminds me of the dot-com bubble. Everything's being ETF'd. Okay, Bitcoin, Ethereum, they make sense, right? But then we've now got guys like Crypto.com here partnering with, Trump's TruthFi or Truth Social to create a basket of ETFs for smaller altcoins. So I think we will pop here based on the current cycle and how things are playing out. Again, things could be different in 3 months. But I do think that once we eventually pop here, it is going to send us down into an ultra bear market, my thoughts, and we're going to experience a change in crypto's trajectory from this nascent, purely speculative class to full regulation. And that is one of the issues that these TradFi firms are facing. But that'll come, I do think, after we experience an implosion. So that's my thoughts. I think, again, we'll experience what may come here. We'll kind of have a better idea of the future of crypto over the next few months. My thoughts are we'll see an elongated bull run similar to 2017 play out here, but that's my prediction, non-financial advice. Guys, that'll be it for today's video. I hope you have enjoyed. And if you have, and if you've made it this far, let me know with a like down there. I will talk to you all very soon. Take good care of yourselves. Bye-bye.